Let's bring in Miss Shay, Danielle Shay, VP of Options at Simpler Trading, as promised. Yeah, we'll keep an eye out, guys, on some headlines coming across here right now. But in the meantime, great to see you, as always, Danielle. Welcome back. Let's jump into a crazy market here again today. What a week it's been, obviously, leading into what we got this morning. The CPI comes out exactly where it was supposed to, or exactly where everyone thought it was going to. What does this mean overall as far as where we're at now, and then what do we expect going forward as we head towards what is certainly going to be a quarter-point hike now next Wednesday from the Fed?
Well, Brendan, I just really think that there was no way that we were going to win with this data because, if it's worse than expected, obviously that's not a good situation. If it's better than expected, that's not necessarily a good situation because maybe the Fed's going to adjust and we're going to have a surprise. And I mean, right now, what we're seeing in this data is we're seeing absolutely historical levels of inflation. And people have to be aware of the fact that our money is literally disappearing as we speak. So what we need to be doing is focusing on investing, right? And looking at a long-term map for that. But the problem on the matter is that the market here is just so incredibly weak. And without any positive headwinds, it's just going to continue to go lower. So the only way to really invest is over a long-term time frame where you're continually adding in and sitting and waiting.
Understand the best ideas and understand where you want to be going forward and work on that. Love that concept. Is there a trade, I guess, is the best way to put it, ahead of the Fed? And are you looking at putting on something on going into that?
So when I'm looking at the Fed, I think it's going to be a really interesting week, and it's most likely going to be more of a buy the rumor, sell the news type of event, just because like you noted, I mean, we're probably going to get that quarter-point rate hike, which is what's expected, right? And so as of right now, we're starting to see just a little bit of a move higher. We might see a little bit more of a move higher into the Fed next week. But I mean, if they come out and raise rates, I can't imagine that the market goes higher after that. The only thing that I can imagine would happen is if, let's say, they shock everyone and they say that they're not going to raise rates, then the market could explode. But right here, the main trades that I see are you can come in, like Sean was saying, and trade the relative strength winners like Microsoft to the upside on these up days, but they're so few and far between. So traders should be looking for weak names on rallies to come in and short.
Speaking of weak, let's go to oil. Let's ask the question, was that a crash that we had yesterday, A, and then B, what do you see as opportunities here on, what seems to be the way back down? We're almost at, that spike low from yesterday as we sit here.
So, it's probably an unpopular opinion, but I personally, I hate shorting relative strength areas of the market. I just feel like my attention is far better served on focusing the weak areas. So traders have been asking me like, hey, can we short this move in oil? And I mean, well, you could have, but I didn't want to step in front of the freight train. For me, what I was looking for is, okay, this thing is so extended. It's really a buy the rumor, sell the news event as well, because everyone was waiting for the US to ban Russian oil, and they did. Once that happened, it just kind of sucked the energy out of that area. But the fact of the matter is that the price of oil is due to geopolitical conditions, and it's not going to get lower. So while we had a news-related pullback, I wouldn't really consider it a crash. I would just consider it a reversion to the mean and pullback. This is my favorite spot to step in when I can actually get relative strength longs like Exxon, like Chevron, and follow along with the trend instead of going against it.
James, the past couple of days here, even as we've seen this continuation in the weakness of oil. I want to get your thought on that geopolitical type of idea here. How do we, kind of manage risk in an environment like this from an option standpoint? Is there a way you can maneuver yourself to make sure, you're still available to capture those outside moves that we're seeing, but also, protect yourself along the way?
Well, one of the most popular trades right now is just going to be shorting the indexes, especially when they do rally up into resistance. If you look at the NASDAQ right now, it's absolutely the weaker link of the indexes. And right now on the daily chart, we're seeing the price action rally back up to the 8 EMA. This is actually it's a really weak rally. I mean, the NASDAQ could rally up to the 21, up to the 34. That would be all the way up at 14,500 points, and we would still be in a downtrend. So, I know everyone was excited about the rally yesterday, but this is a weak market, and we're not seeing any type of consistent buying. So if you want to be protected, the best thing to do is look at the indexes and short them on these rallies.
NASDAQ gets to bear market territory officially earlier this week. How does that change your approach as far as everyone knows you're a big fan of trading these names, these big names in the NASDAQ. How are you going to shift gears here and manage around that idea that we're down so significantly?
Well, I mean, traders really have to be focusing on fading big moves, because the way that this market has traded is, we'll get a day or two of strong price action, and that will trick traders into thinking, oh my gosh, the low is in, let's start buying. This is a great plan. And that's exactly when everything rolls back over. When you're in a bear market like that, those bear market rallies just have a way of hitting the euphoria in a trader. What you can do is, obviously, you can day trade those names higher. You can trade Microsoft higher. You can trade Amazon, Tesla higher on those days. But what you need to do is don't convince yourself that just because, Nvidia is up 6% one day, that doesn't mean that we're not in a bear market. So you want to fade those big moves. And on the up days, you can focus on the relative strength winners.
Us. Hey, what's up, Danielle? Yeah, normally we get a heads up on that. Thanks, Randy, for that one. But Danielle, how's it going? And happy belated International Women's Day as well. Thank you for providing such great content for our viewers.
Oh, thank you.
Okay, quickly, what exactly is a leap, and why do I keep hearing people saying buy leaps on the NASDAQ? Because for the long side, like, I'm thinking that maybe we have a couple more weeks, maybe a couple more months of downside. But if I really think the NASDAQ is going to close maybe even higher for the year, something like that, what does it mean when I hear people saying just buy some leaps, like 2024 leaps or something like that? What does that mean? And if you can explain that as basic for a guy like me as you possibly could.
Of course. So it's just basically a long dated option. When you're buying a long dated option, it just gives you the flexibility that, if the NASDAQ keeps going down for another 2 or 3 weeks, your time frame is going to be a year, 2, 3 years out. The problem with options is that they expire, okay? And so when you're looking at options that expire next week or the week after, if you say, hey, I think the NASDAQ is going to rally and it doesn't, your option's going to expire worthless and your investment disappears. When you pay that money for an option that has a couple weeks till expiration, known as a leap, not leaf, leap, then you have time on your side. So it's just one of those things, well, surely in the next year or two, we're going to be higher than lower. The other problem with this, though, is they're going to be a lot more expensive. So you have to keep that in mind.
Is that something that you ever put on or anything, is on an index, or do you play a little shorter term?
Honestly, I don't. With my options trading, I'm usually going to be really anywhere between overnight and about 30 days, maybe 45. I like to keep that, in one account separate, and then I keep my investments in additional accounts. And so if I'm going to do a long-term trade, primarily, I'm just going to do it with stock. So not something that I employ on a regular basis.
Thanks for the education, Danielle. Neil, my man.
I want some more education here, because you mentioned something. Of course, you can play the rallies in strong stocks, but overall, the market's been to sell the indexes. So we just had the death cross in the Qs. You get the 50 breaking the 200. A few days ago, I forget exactly how many days, but a few days ago, we just had that. Shorting any kind of a pop has been working this year, right, as an overall trading strategy. But what signal would you be looking for? Maybe it's the Fed making a certain move, a certain number of rate hikes, or something to do with the balance sheet, or maybe it's a technical signal. At what point would you say, okay, we have to start rethinking that notion, because you're already down 20% in bear market territory? What is that point where it flips and you say, okay, I need to be thinking about the other side of this trade and looking to start to go to those longs? Shorting every single pop is no longer going to be viable.
Of course. So, I mean, for me personally, it's not necessarily a macro factor, even though obviously that does, drive the news and it drives sentiment. For me, what I really look for in that respect is going to be technicals. I would look for the primary indexes to break up above resistance. If you look at the charts right now, I mean, we're so far below resistance of these points. Typically, and let's see, I do have the NASDAQ up here. So typically with the NASDAQ, I mean, I'm going to look for it to break up above the 50, 100, and 200 simple moving averages on the daily charts. I'm going to want to see it break up through those levels on high volume with momentum, more than one trading day in a row, which, I mean, it would have to be many more trading days in a row at this point, because we're down at 13,600 and your 50 simples up at 14,700. You've got your 200 simple, which is the key line in the sand, up at 15,000. So, I mean, you have, 1,400 points of room where we could trade to the upside, where it's still, in my opinion, a bear market rally. Once you get above that level, once you see Microsoft, Google, Amazon up above their 200 simples and preferably above the 50 simple, that's the point in time where I would look to start trading, on a swing basis to the upside. But for now, I mean, you can trade between here and there on those rallies higher.
Perfect answer. And I'm going to note that, of course, I don't think you mentioned Facebook in there. And we just had this discussion yesterday.
No, we don't talk about Facebook.
We don't talk about Facebook in that group anymore.
No.
It's just, it is what it is.
I've never even really heard of that name before. It's a Meta, Facebook, something like that. I don't know anything about it.
Exactly.
I don't know.
Thank you so much, Danielle. And by the way, you're getting some love in the chat over the Disney call, because clearly that's going southbound still under some pressure.
Awesome. Well, I'm glad to hear it. I mean, a lot of these tickers, and it's crazy because that's why I have to have my long-term and short-term accounts separate, because I mean, I'm a Disney shareholder. I like the stock. I like the company, but this is a short right now. And same thing with Facebook, with Netflix, with basically anything in ARK. And I mean, you can still like the company and use the product, but look at that technical pattern and down she goes. So, short-term trades, long-term investments, that's the way I do it.
I know you're busy, Danielle, so we want to get you out of here. But real quick, RIVN. I completely forgot to ask you about RIVN. What do we think here going into the report aftermarket tonight? Where do we go from here?
All right. So this one is, first of all, I have to tell you, I'm a little biased because I love Tesla and I love Elon Musk. But I will tell you from a technical pattern, I mean, this chart is just a disaster, okay? You have a situation where So last quarter, let me get up my earnings stats here. We only have reported one quarter on this. And last quarter, they gapped down 8.2%. They're down on their lows. They're below their IPO price. They've fallen the entire time going into earnings. This structure to me is setting up for what I like to call the earnings explosion, where a company just gets completely destroyed on the report. So the way that I've been trading these is, you can try to come in and short them before the report. The problem with that is, especially in the options market, the options are very expensive. And if you're wrong, you're going to lose your money. So what I've been doing with these is I've been notating them prior to the reports because they fit this downtrend pattern. And then upon the report, if let's say there's some miracle and RIVN, it ends up at $55 tomorrow. It has a, $6 expected move. Let's say that it does. I mean, that's a perfect spot to short it because most earnings moves have been fading. Now, let's say it does roll over and die tomorrow. Then I would just trade it and follow the momentum lower. But I don't see any situation in which this chart pattern starts to look good.
I think you would be in the popular group with that assessment. It seems to be the case going forward here. Danielle Shay, VP of Options at Simpler Trading. We appreciate your time as always. Have a wonderful afternoon.
Thank you. See you next time.
Great stuff as always. Tons of ideas there, guys, for Ms. Shay.